All right, this is a trade on Home Depot from 11/28/2022, the first candle. And I'm going to go ahead and lock all of them to this one. I'm going to pull up the market calendar here, or not the market chart on this one. So we have the Russell. We have straight line information down on the 233. If you look at the daily, it's starting to turn down, or it has already started moving lower, and not this resistance is pretty flat. So I believe there's other markets that are supporting this trade as well. If you look at 1122 or 1128, I think I might have said 1122. We're in the Super 6 period and the earnings catalyst window also. That's 2 weeks ago. So we have 3 catalysts on this one. If we check out the trade itself, red is very indicated here. Look at the 3-day. We have the top Bollinger Band and the 89. That counts really as one because they're crossing. You could also see the 144. Looks like that's all on the 3-day. On the daily, the 377 in the purple line. Stock RSI, we have the MACD about to cross, or maybe starting to cross there. So there are, I would say, 4 pieces of hard evidence or hard support here. On the 233, we have the, that may not strictly be crossing, but it's moving down, I'm going to call it. And then we have this one. If I were to turn off the candles, it's possible they're not quite crossing. Let's see what happens if I look at the 144 over here. Boom, boom, boom. I think there's also, straight line information on the previous candle on the 144. So that works. If I assess the support lines here, you have the 13, which looks like it's slowing, could be flattening, could certainly turn up. We have this 987 line right here, acts as support, and same with the 21. So that's something to kind of be aware of. If you look at the auto wave calculation on this one, I usually have these off because the numbers really clutter. But if you go from here to down here, I'm not quite sure why my cursor isn't doing the calculations here, but that's okay. It's about 7 or 8 points on the auto wave calculation, so not anticipating a significant move. And so I said the 320 puts, so basically right outside, basically just barely out of the money. So let's just go ahead and go for it. I'm going to put draw a line over here, just to kind of make it clear where the entry is. Just for fun, I'll put one on the daily as well. So let's see what happens after. So 1 candle, 2. So let's just go back really quick. The entry, so the decision's at almost 321. The entry would be not a gap down, so it'd probably be around 320, where the entry would be. So after 2 candles, we just moved 1% or so in our direction. The entry criteria have not deteriorated, so we're still good. We'll go 3, 4, and if you let me see. After 4 candles, 2 days, this had moved down to 313. At this point, there were only a couple of exit criteria. You have the down auto wave line, and the stock RSI being under 20. I think over here there aren't any on the daily or the 3-day. However, this point was actually the correct exit for this one, which normally you wouldn't go for. I trade this short. However, if you were anticipating it, why not? If you look at this 233 on the 233 chart, the steepness of this, it looks like it's still increasing. The 34, and the daily also has some support just a little bit under. So this actually was the exit. I'll move forward in a minute, but I'm going to look at some of my other notes. I said, notice the entire picture on especially these bottom, well, when assessing, I said, especially on the smallest two charts, when assessing potential or likely duration of the trade, often I only notice the most proximate moving average lines for potential support or resistance. However, looking at the entire picture of each time frame is needed. In this case, at the start of the potential trade, the decision point at the start of the nearest support on the put options were I'll come back, the 13, the 97, the 21. And these were easy to kind of really fixate on. But 20 points under that was under this, actually it's not even 20 points, 10 points. Yeah, it's hard to see that number. 10 points under. The 34 was rising pretty steeply, about $1 a candle. Projecting forward 4 candles, this may be around 310 or 11, which is actually where it was. On that candle, the stock was at 313. So this could have been entered as a trade with the correct option prices, and as Gary Williams says, attack the market, take a chunk out of the market, throw the gains in the pile, and move on. Don't get greedy here. This could be a trade. I mean, you could make. I mean, I don't know what the options would have gained you, but I mean, you could have made 30% on this trade, I suppose, maybe more. I don't know. But regardless, enter with certainty and action and courage, and be decisive. Because if you carry on this, you immediately lose money. But if you enter this decisively and anticipating 1, 2, 3, boom, bouncing, getting pushed up from this moving average line here is very, very likely. So I think it's a good thing to kind of keep in mind. This would be maybe Gary Williams would call this kind of more of a Hershey Kiss type of a trade. It's like an extended sniper, which is not something maybe he would say, but like, this is going to be a short trade and you can capture some gain on it. So do so. Be professional, take charge, and go forward.